To you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We're fired up. We've got the congressional hearing today on the GameStop saga, so I am fired up for that. It's going to be fun. That starts at noon Eastern time, but we got some stuff to talk about until then. Earnings on our radar, rotation on our radar, vaccine rollout on our radar, a lot of things to discuss. Our guest today, Mark Chaikin, will join us at 8:15, and Buck Andrews will join us at 8:35. Buck is, of course, the founder. You okay there, Dennis? Buck is the founder or co-founder of Inform. Today's show is also sponsored by Inform. I'm putting the link up on the screen to check out that site, inform.info, in4m.info. Joel, bring up those charts and tell us how we're doing here in the overnight session.
All right. Good morning, traders and investors around the world. It's kind of a weird day. There's a lot of things going on, but we're still basically in a trading range here for the S&P. We had three closes right in the same area. Got a little bit above that. So I'm looking at 39.30 on the upside. It's around those closes. And on the downside, I mean, until we take out Friday's low at 39.90.5 or 38.90.5, I don't know. I don't think the market's going down. Crude up 41 cents at 61.57. Gold just trying to hold the bottom of this major trading range. That's up 10.40 at 17.83.20. That's the gold market. Silver going opposite ways. If you're doing spreads on that thing, man, you better rewrite your spread book because silver's going the opposite way. That's down 4.5 cents at 27.27. And Bitcoin, we're hanging up here in the 50,000 handle. Got the 53 and change a little bit earlier. Now down $1,000 at 51,675. Triple D, you've been observing the markets, the after hours, and also the pre-market, and it's just, I don't know. I can't describe the feeling. It's like we're just kind of churning and can't really go up or go down. What from the order flow, from what you're seeing out there, what's your take on this market?
Well, we were up last night, and we were up
we
substantially. Not the S&Ps being up 6 or 7, but there were stocks getting bid all over the place, and they pulled the rug out from underneath them overnight. So I go to bed looking like we're going to have a bullish day. I wake up, and it's a significant bearish day. And again, same story. These mega caps, not performing. Tesla gets a nice bounce back day yesterday. Amazon gets a nice bounce back yesterday. They're both weak today. So you're seeing, not sustained rallies in some of the bigger names. The smaller names have been what is carrying us. Although yesterday, IWM had a couple weak days. It did close well. Obviously we sold off early and we closed fairly strong, so it makes you think, okay, well, maybe we're going to get this next leg higher here again. But this morning, a little rug pull, but to be determined. I mean, we're definitely not, down 13 handles in the S&P isn't, significant whatsoever.
Nothing.
Yeah, it's nothing. So we're hanging out. We got a big battle between the bulls and the bears, and it's more of the same. I mean, Walmart puts a little damper in the market here, but again, you look at Walmart and you think, okay, is this the kind of stock I want to own if I'm, trying to make 10% a day, which a lot of these other stocks have been going? It's not.
Nope.
So, let's go and let's start right with the Walmart earnings because it's the one report, the big report that everybody's talking about this morning. It is getting hit here on a sell-off, but I think they were going to find a reason to sell us no matter what.
Well, here are the numbers. Adjusted EPS, $1.39 versus $1.50 estimate. So they missed their EPS number. Sales did beat 152.1 versus $148.4 billion. So a mixed report on the headline Q4 numbers. Comps up 8.6%. That was better than the 5.8% estimate. What other numbers did I see? E-commerce sales up 69%. They're also raising their quarterly dividend by a penny from 54 cents a share to 55 cents a share. And they're also reporting a $20 billion buyback. I am seeing some commentary about weak operation sales in international markets, specifically the UK and Japan. Don't know too much about that. I'll just stick with the overall numbers there. But e-commerce sales good, comps good, buyback, dividend raise.
I mean, lots of good things said. They're concerned about this, bottom line, they lost some money on this asset sale or something. But again, it's the kind of stock that had a nice little rally into the reports. It was a nice setup for the shorts. And I just think this is the kind of stock that people aren't interested in right now. 1.5% Walmart. I mean, is that a sexy story? Is that like lithium? Is that EV? Is that pot? Is that crypto? It's none of those things.
Nope.
Again, this market wants that sexy story, and that's why they're selling these stocks, and they're having a reason. So if you're coming in, and buying good companies on good fundamentals, you may eventually be rewarded for that. Like buying Walmart at 140, maybe you're eventually be rewarded for that. Right now, this is the kind of market they're selling these stocks.
I'm looking at the 15-minute and the 60-minute, and obviously there's a buyer right now just under 140. You have a bunch of lows, and this is just going over the last couple hours, just under 140, 139.71. But I see a spike here. Was that like an off-exchange print or something like that, Dennis? This didn't go back up to one. I don't know. On my 15-minute chart.
8 o'clock?
Oh, that's right.
At 8, at 8 o'clock, there's always off-exchange prints that are hitting the tape. So, okay, good lesson, though. If you're seeing some crazy spikes in your charts at 8 a.m., or even 7 a.m. 7 a.m. is when Edge opens. Those sometimes are actually real pre-market trades. 8 a.m. is when a lot of times trades from the previous day are hitting. I don't know why they hit at that time. I don't know the background behind it, but sometimes they post these off-exchange trades at the close, so it's closing crosses. For whatever reason, some of them post at 8 a.m. And they'll throw out your chart if your charting service is looking at FINRA, which is off-exchange, and some of these off-exchange trades are relevant to the market, but some of them are late reports. So that I would assume probably, and I don't know if Walmart spiked up there or not because I didn't go look at the tape, but I would assume if you saw a big spike right at 8 a.m., it might have just been an off-exchange trade.
I should have known that.
Okay.
So, but no, thank you. No, I mean, the timing of it. All right, and on the dailies here, you got a low at 139.19. I mean, does it find a home in here, 139, 140 today in rally? It very well could. I haven't seen, when's the last time we saw a 6-7 point down move in Walmart? It had to be during the financial, during the March meltdown. So I'm not shortening in the hole here. 139, 140 looks like a buy area if I had some puts or, was trying to cover short. That's for today, but definitely you're going to get a rally here in some time. I just don't think you're going to get back to yesterday's low at 144.50. That's technical look at this one.
I'd be a seller rallies short term just because, again, until the speculative...
Out of favor.
It is. Until the speculative bubble bursts, and we do have a speculative bubble in small caps. People are just buying small caps. They're buying, whatever companies, $1, $2, $5. Until everybody gets burned there, these stocks remain out of favor, in my opinion. So, and I'm playing, the small stuff too. And, from a trading perspective, I'm not buying Walmart on the dips. I'm buying, these other speculative companies, some of them. Some, not necessarily, but, you're buying more smaller caps, mid-cap names, stocks that, have underperformed for a lot of years. It's their time right now. Again, this can all change on a dime. And, yesterday we saw a little bit of a change, a little bit of hope in Amazon, a little bit of a bounce back in Tesla. But, today more of the same. They're just selling those stocks. So, guilty until proven innocent for Walmart.
And also, I don't want to go into a whole pandemic discussion here, but Walmart had a hell of a year, right? And a lot of it was because of the pandemic. People were loading up on stuff, and and they're talking about selling this Japanese operation, everything. I just think they just knocked it out of the park, last year because of the circumstances. Now we don't know what's going to happen moving forward, but they were just pumping out. People are ordering online, and maybe they just don't expect that to continue. But
well, is it as good as it gets? I mean, you're talking FedEx, you're talking UPS. They had decent reports, and they sold them off. Is this as good as it gets? They looked Amazon, the same thing. The Amazon report was fabulous. It was way up, and they sold it off because they're looking at the market and saying, okay, going forward, we're coming out of lockdown. We hope, unless the South African strain has something to say about that. But it looks like, markets trying to look past COVID, and they're saying a lot of these stocks is maybe these are the quarters as good as it gets. So
maybe that's the case.
Silence for a second. I kind of like that silence.
Does that mean that you're buying the dip on like these Bitcoin stocks? And we'll talk about this more with Block 835. But like SOS this morning. No. That's what you said. You said the speculative names.
Well, that's super speculative.
Yeah, I knew you were going to use that.
A few of these I do trade. Okay. I've been down and dirty in that MFH one, and I've still got a little piece of it. I picked up that one. I think I talked about it a few days ago. I picked up that one around $4.50. It exploded yesterday. I sold half of it yesterday. I don't know how the hell you even get out of these things when they go like that. I'm up in a week. I'm up like 150% or something stupid in it. These are some of these smaller names. I don't like buying them once they're gone. Like I like chasing something that's all of a sudden it's up 100% in a week because I can't control the risk. When you're looking at this thing back at 450, and some people were saying, this was on Twitter. People were talking about this as being a potential, crypto play. I didn't do hardly any research on it. I was like, chart looks okay, and they're talking about it as a crypto play, a Bitcoin play, blockchain play, whatever. So, I nibbled. So I did nibble in that one, but this is like such small little amounts of speculative capital. This is not my bread and butter. You guys know I'm a mega cap trader. I'm more like inclined on shorting. Like, the trade has been, one of my buddies at Bright Trading was saying, the trade has been to be short Amazon every night, for the last week and a half. Yesterday, that trade didn't work out as well, but it's really been the play is that market's going to be up and Amazon's not going to be up. So, shorting, if you're doing hedge trading, shorting Amazon and being long Qs has been a great trade here for the last couple of weeks. Which is absurd to think about with Amazon being such a big component, but it's all the smaller stuff that's been picking up the slack, and it's the smaller names that this market wants to own. So lots of different strategies. You've always got to be adapting. You've always got to be doing different things. You've always got to be playing around, and sometimes, whatever you're doing is going to be working. But when you get a basket, if you're sitting and you're a trader, here's another rant. You're sitting in here and you're a trader, and you've got like one or two strategies, and that's the way you make your money. I'm going to tell you your toolbox isn't big enough. I probably have 100 different strategies that I rotate through. And when I see something happening, I was like, oh, this is what they're doing. And I go grab that tool out of the toolbox, and I use that tool for a little while. I use that strategy. And then, okay, they're pulling this one out, so I'm going to do a different tool. And all that is screen time and experience. 21 years trading professionally every single day, putting in your 6 or 8 hours a day. Every single day, and you get more experience, you get more tools in your toolbox. So there's a time for being aggressive on the short side, there's a time for being aggressive on the long side. Lately, I've been aggressive on the long side where I haven't been trading hedge. I've been sticking with a little bit longer in some of these smaller cap names because it seems like there's a new one every day that just spikes up. So you always got to be adjusting, doing different strategies. But, if you're always just playing, the speculative stuff and it goes up every day, eventually that doesn't happen. So you've got to have more tools in your toolbox.
100 strategies. Vegas wants to know how much Ritalin you're on.
Yeah, no, none. Okay.
He doesn't employ all 100.
I don't even drink coffee.
No caffeine.
He doesn't even drink coffee. I know. We should put that out there.
No Ritalin, no caffeine, no nothing.
Yep.
No, you can't be on. I can't go on caffeine. I'd be bouncing off the walls. You wouldn't even hear me talk. It'd be like that Micro Machine Man from years ago. So
yeah,
no coffee.
All right, it's 8:15. Let's bring on our first guest, Mark Chaikin, founder of Chaikin Analytics. Speaking of having different strategies and putting in screen time, Mark's got decades and decades of experience. Yeah. Mark, good morning.
Good morning. No Ritalin here. Sorry.
No Ritalin. That's good.
It's a nice scarf, though. I like that scarf.
Oh, thank you. Yeah, it's pretty cold in Connecticut.
It's cold. Don't bring that up around Dennis. Don't mention the cold or the snow around
What's
Dennis.
the temperature outside here right now? And this was a warmer day. Let me just look at my cell phone. Right. What is the temperature here in Georgian Bay? We are 16 degrees. 16 degrees. Wow. So that's actually a pretty warm morning.
Downright balmy.
Yeah, the neighbor's out there in a swimsuit.
All right.
Okay, next.
Mark,
Sorry.
Mark, what are you seeing out there right now? Seeing a lot of small caps moving, large caps not so much?
Small caps moving, large caps, particularly the mega cap stocks that Dennis was just talking about, are affected by higher interest rates. If you continue to see higher interest rates, there'll be a PE multiple contraction. That's really all it's about. Amazon's business is going great guns, but and this could change overnight. You know, the Fed yesterday sort of hinted that they're not going to let this get too far out of hand, and you do have big inflation numbers, but all things being equal, small caps are where I'm looking for opportunity. Had a stock that I own, reported before the opening, Sleep Number, big earnings, up 13%.
Yeah, that's a big report.
Yeah, I mean, this is being repeated over and over and over again. You see the power gauge ratings pointing you to stocks that are bullish. By the way, that Mercurity Financial bullish rating, unbelievable, off and on over the last 9 months, whereas Walmart has a bearish rating. So the fundamentals do steer you in the right direction.
Yeah, let me just give those sleep number numbers for a second, because they were very good. The EPS was $2.19 versus $1.44 estimate. Sales of $568 versus $551 million. They gave guidance for the year. EPS at least $6 for the year versus a $4.48 estimate. So they blew away the estimates for EPS for the Q4 and their fiscal year guidance. So just a great report for SNBR. It is up, like I said, big time this morning.
It's a small cap name too, and people like the small caps right now. That's what people are gravitating to.
That's where they're going. My colleague Dan Russo recommended this at about 90, and Sandy jumped on it. She owns it. I actually don't own it, but we're all family here in Connecticut. And look at that chart. I mean, this is just amazing. But I could give you over and over some of the names we've talked about on here. Turtle Beach, HEAR.
Yeah, that's
that's a good one.
Mitch gave us that too.
Yep. I mean, look, these are the charts that people are looking for, and these are the kinds of stocks people are looking for. And they're thin and they're underfollowed. That's one of the key themes that I think you're seeing, and I know you guys talk about that. The small caps do not have a big analyst following. You get a big earnings report from a Sleep Number or a Turtle Beach, you're going to pick up some analyst coverage, and that makes a big difference.
And CNBC coverage. I mean, that's where, it's unbelievable the effects that CNBC has on stocks that come on. An analyst will do an upgrade, and the stock will go up 3%. They'll pop on CNBC to talk about their upgrade. It'll go up 10% on that segment, because then everybody's seeing it. You're getting all those eyes. And there's so many people who are just watching CNBC for the next trade. I'm in there too. I trade the stuff too, because there's going to be a pop with it. So CNBC influence.
I think you're leaving out the Wall Street bats and the Reddit crowd too, getting in on these stocks.
They are. They're on the
Street
CNBC
rating.
trade. They're on the CNBC trade.
Yes.
That's why the
Wall
CNBC
Street
trade is so
analysts,
influential.
I think that's a whole new dynamic that's entered the market, and it's definitely. It's gone way beyond GameStop and AMC. So that's analysts, a lot of times they're a fade eventually, when they get these kind of moves. But I think that's another factor. Mark, let's just talk about the overall market here. You get, I look at things on a closing basis, 3 closes, right in the same area. What do you think? Is this time for a little pause here, or are we just looking at 400, 4,000 in the S&P?
We're probably looking at 4150 to 4350. I thought it would come by the end of the year. It may come sooner. It's a slow melt up. This is the same scenario we've been looking at since pretty much April, May. Too much money with nowhere to go but equities. And I've said for a long time that the riskiest trade in the market was the long bond, or the bond market, and that's sure playing out now. And if you go back 3 months and see all the money that poured into bond funds, for everything from governments to high-grade corporates to high yield, it's hurting. And that's not going to get better anytime sooner, because the vaccine rollout's going to pick up momentum, a lot of mistakes being made. Look what's going on in Texas. It's tough to turn this market back. It really is. Think about the only thing that's caused a 2.5-day decline. It was the madness around GameStop and the whole short covering gaming the guys who had a cover and selling the stocks that they were long, like Expedia and some of those other names.
Mark, I have a question there for you. Chaikin Analytics is a really good fundamental research platform, but fundamentals don't really seem to matter at all right now. So how do you square that circle?
I would dispute that one, Spencer. Look at Sleep Number. That's all about fundamentals. If Sleep Number had reported a flat quarter or negative guidance, that stock would be down 15%. The way we solve the problem is to rely on the power gauge rating to point you in the direction of stocks that are likely to outperform, likely to report positive earnings surprises, and then blend that with relative strength and Chaikin money flow. It's really just 3 indicators. You don't need 100 systems. Dennis can handle that. Most traders can. And so we've distilled it down to 3 indicators, and we've been talking about this for 8 years. So it's not like a Johnny-come-lately strategy. Relative strength has been working since time immemorial. Go back to the mid-50s. Group strength works. Industry group strength works. So this is not a complex. Here's the biggest problem that traders have. They don't leave their baggage at the door. And if you don't leave your baggage at the door, you're coming with preconceived notions, you're stubborn. If you leave your baggage at the door when you open up your computer in the morning, focus on the stocks on the long side and by the way, the short side has been icy, just like it is outside here. You can't make money on the short side consistently in a secular bull market. It's just a losing game to fight the trend. So trend of the market, power gauge to find the right stocks, relative strength to confirm that the market agrees with you, and Chaikin money flow to tell you whether or not smart money is accumulating. Let's go back to probably the biggest disappointment of mine for the last 6 months, FedEx. All the way up, as it was making new highs above 300, Chaikin money flow was negative. We were actually asked about that on the show. Why is Chaikin money flow negative? There's a story in there. Smart money drives the market. And by the way, with this rally up to 260 in FedEx, I think it's time to exit the party.
Is it as good as it gets, like the Walmarts? Like, you were in this perfect environment for FedEx, Amazon, UPS, Walmart, and you look and you think, what's the drive? If we come out of the pandemic, people like Joel is saying, I'm excited to go out to stores again. There is going to be less people, and there's still an overall, acceleration in people ordering stuff online. But we've had this like spike up from COVID. It's gonna, plateau and maybe come in a little bit here. So I kind of agree with you, even though I do own FedEx in my long-term portfolio, which I've had for a long time. I kind of agree with you that I think it might be as good as it gets. Yeah,
and the stock I am most bullish on here, stock I've talked about, I own it. Sandy owns it. Pinterest. Blowout quarter. When we were on 2 weeks ago, I think it was 65, rallied up to 88.
Yeah.
The numbers are fantastic, and they have great sponsorship. Remember sponsorship, Joel? When that actually mattered. So you've got Motley Fool, you've got one of the sort of Twitter monitoring services like Folio, you've got the guy in Chicago, Ofer Gottlieb. They all love this stock. You've got legions of people just looking to buy this on dips, and a great business model in my view. I actually understand what they're doing. They've linked up to Shopify. So if your wife goes online to get a decorating idea, she can actually transact through Shopify and other online shopping engines right from the Pinterest site. And they're developing sort of virtual experiences. I just like the story. I like the technicals. I like the earnings. Is it richly priced? Yeah, but it's a lot better than buying QuantumScape or QuantumScope at $18 billion valuation that hasn't even figured out their business model yet.
It's a good point. Yeah. Eventually, the fundamentals are going to matter on those smaller names, so maybe better to steer towards the ones that already have that figured out. Mark Chaikin is the founder of Chaikin Analytics, joins us every other Thursday. Mark, thanks for the time. Stay warm, stay safe. We'll talk to you again.
My pleasure. Be well, guys.
All right.
Thanks, Mark.
Thanks, Mark.
Dennis, and Joel, do you have any comments on the hearing that we're going to get later today, starting at noon? And public service announcement: Benzinga will be streaming that hearing right here on our YouTube channel. We're not going to stream it the whole time because we realize it's going to be mostly boring, but like 95% boring, 5% hilarious. And so
I'm cringing ahead of it.
We're gonna have somebody.
I won't be able to watch it.
We're gonna have
There's
somebody
gonna be
watching.
so many dumb questions.
Right, and that's what we're ready for. So we're gonna have somebody watching, and we're gonna queue it up. And whenever something dumb happens, we're gonna play it for you and talk about it. So it's gonna be.
I am just cringing. Joel, you want to talk about it first before going like 5 minute round?
I'd rather walk barefoot over hot coals than or go to the dentist and watch that. I mean,
you're going to get a bunch of house reps
that don't know nothing about the market
structure plumbing questions that they don't understand. And they're going to probably be a beat on short selling. There'll be a couple of people that won't even understand that short selling makes the market more efficient. So there'll be some people saying, well, we'll be betting on stocks going down. There's going to be some attacking of probably Melvin Capital for even betting on GameStop going.
They are. They had to defend their stance.
But yeah, they're gonna bet. Yeah. There's going to be like literally some reps that are going to probably be attacking Melvin Capital for betting on the short side, which is just ridiculous. So I don't know. I cringe ahead of it. Maybe maybe they're going to surprise me and actually ask some relevant questions and get some good information out of there. But I think it's going to be a big nothing burger. Ken Griffin's testimony, if you read it, really didn't say much at all. He's going to just be sitting back and obviously defending the payment for order flow model. If they start getting into payment for order flow, that's where it gets interesting, and they will. I mean, that's where it's going to go. But if they're just going to be asking a bunch of questions because they don't understand it, and it's complicated to understand. I mean, you can get, people, seasoned traders that, don't totally understand the mechanics that are going on behind it. I can summarize payment for order flow for you very quickly in the next 30 seconds. Let's keep it simple. The pros, and this was Petterfee that was talking about this on CNBC yesterday, but he outlined it nicely. The pros are they have driven commissions down, so you could say zero commissions and price improvement. What is price improvement? It's getting a better price than what the offer or the bid is. So when you lift the offer or hit the bid, you get a few sub-pennies better. That's what price improvement. That's kind of the pros to payment for order flow. Now the other side, which I have argued for a decade, is that, and this is where it gets a little more complicated, but I'll try to keep it simple, is that when you take all this retail order flow and you push it off the exchange, which is what, payment for order flow drives the flow off of, it drives the flow to Citadel, to your off-exchange market makers. When you keep all of that orders off of the exchange, because, you at Robinhood, your orders usually, if they're passive limit orders, they might, but if you're crossing the spread and sending market orders, those are going straight to Citadel. They're not seeing traders like myself. So what that does is it discourages market makers who are making markets in the market. So if they're on the offer, I'm trying to just, keep it very, very simple. So, market makers are providing bids and they're providing offers for you to get out. If they're always getting picked off by high-frequency traders and they're never getting any other orders, they're not getting retail orders that are smaller, they need to widen their spreads a little bit to make up for the difference. So what happens is it's called the toxicity of the market. That's the technical jargon behind, that's the bigger word. But the market becomes more toxic. So these market makers got to widen their quotes a little bit. So instead, and this is what you see in the small caps, and this is why the small caps are a mess. You don't see it in mega caps. You don't see it in Bank of America. You see it on the small caps. Wide spreads. You'll bring up a stock. Sometimes you see some small cap names got like a 10% spread. You will see that in certain stocks. The reason for that is there's no market makers that want to be providing tight markets because the off-exchange market makers take all the good flow away. So they're not profitable unless they make the spread really, really, really wide. So your spreads on some of these small caps could probably be here if we didn't have payment for order flow and off-exchange market making, but instead they're here. So now they got price improvement that's coming in. They're saying, okay, well, here's your spread. We got your price improvement. We got you to here. Because Dennis, you're getting a little bit better price. But really the spread maybe should have been here, so you would have got this if the markets were more efficient. That's the argument on the other side. So, basically 3 points. 1, pros, price improvement, zero commissions. Cons, the spreads are wider and you're paying more because the spreads are wider. And if you think about it, the off-exchange market makers, we know they're going to testify, one of them today, obviously are making money on those orders. And they're not making it by, selling the data or figuring it out. They're making it on the spread. It's all about the spread. The major media is not talking about the spread. They don't understand it. It's all about the spread. A market order comes in to buy, they can sell at the offer. Market order comes in to sell, they can buy at the bid. They can basically jump the queue. That's what it allows you to do. When the orders are routed directly to you, you don't have to post. You don't have to be out there. You can just match the quote or give a few sub pennies better. So it's all about the spread. And that's why they pay for those.
Yeah, I talked about that when Bill was on. I mean, like they're just going boom, 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 boom. You know, they're like in and out, penny here, 2 penny here. They're not holding GameStop for $85 or
Citadel made a killing on GameStop. You saw the flow; it's going back and forth. They're pinging between the different offers. Sometimes the spread was $2. Boom, I sold. Boom, I bought. Boom, I sold. Boom, I bought. Making that spread all day long. They made a killing on GameStop. So they didn't shut GameStop down. They made a killing on it. They would have loved it to keep going. There's no doubt that they would have made a killing. A market maker getting flow like that, going back and forth, it's evenly matched. It's a dream. So in all likelihood, I don't have Citadel's book, but I would say in all likelihood, they did very, very well in the GameStop situation. So that's why Citadel didn't call up Robinhood to say shut her down. They probably were pissed off that they shut her down because they were probably making some money. So anyways, you think you're hurting the hedge funds? You helped Citadel with the GameStop story. I will tell you that much.
Right. And maybe a firm like Virtue, which is the way to trade this, but hasn't really gone anywhere.
It doesn't move. I don't know.
They're concerned. But think, there's two concerns for owning Virtue, and I sold my Virtue Financial for this reason. I've owned it for a long time. Two major concerns. One, payment for order flow goes under attack or goes away. That hurts their business, so that would hurt. But the other one is the financial transaction tax, which is the boogeyman in the room. And this is going to come. We're going to bring Bill Hartz on to talk about this maybe next week. But I've talked about it too. A financial transaction tax that if they didn't give a market maker exemption, would destroy the retail brokerage industry and would really hurt the off-exchange market makers, obviously, as well. It would really hurt everything. So those are the two boogeymans in the room. Now, Virtue, Citadel, get a market maker exemption, which I think they would. Then that would actually benefit them significantly. And if they all of a sudden get a market maker exemption, I'll be getting long Virtue Financial. So that's the wild card. Two things: payment for order flow and the financial transaction tax. Virtue Financial, great company. Obviously, off-exchange market maker, firing on all cylinders. Their quarters have been excellent. I'd love to own the stock, but I just don't know where regulation's going right now. So I'm just laying off here for a bit. But I'm still on my watch list to rebuy it.
Yeah, 20. I mean, this has been in a trading range, and it's kind of trying to extend the upper end of the trading range. I'd keep an eye on this $29 area, a couple of highs right in a row. So you break above 29, you got more work to do at the high of the move. What's that, 29, 28? So it's trying, but kind of trying to pierce the top of the trading range. So you know what happens there. If it doesn't get through the top of the trading range, maybe headed back to the lower 20s.
Also, I just want to clarify some confusion. There's two Citadels, right? There are Citadel Securities, there's the market maker. That's who Dennis is talking about.
Yeah, and
that's not Citadel, the hedge fund. It's confusing. They have the same name.
Their market maker business kills it. I mean, just rocks and rolls. It's got all this captured flow that it can profit from. It's a really kick-ass business.
Right.
So,
but they're two different businesses. Let's clarify that.
Well, when you get that big and you're worth that much money, you get into everything.
Right.
Citadel is like the Amazon of the financial markets. I mean, they're into everything. Why would you not be?
They don't like
Ken Griffin's a genius. There's no doubt he's a genius. Ken, if you're listening to the show, we love you. I don't totally agree with how everything is set up, but
I wouldn't say we love him. Let's stop there. I wouldn't say.
Can we get him on the show? Well, we don't love him.
I wouldn't say we love him.
We don't love Ken Griffin. Okay, we don't love you.
Draw the line somewhere.
We don't like you, Ken Griffin.
Jesus.
You're up there hiding in the tundra, and
we don't like you.
All right, great, Dennis.
I just outlined the whole thing. You know what? It is what it is. He's going about everything legally. I would like to see some regulation, not maybe necessarily, just more on off-exchange market making on the way it's done, because I think I would like the spreads tighter. So I would like to see regulation there. But it's a good argument on the other side because you guys want your free commissions. Well, you can't get it all. So, I mean, that's where you go.
We've had Brad Kasiyama on the show before. I think
Have we
so.
had
Yeah, we had him on years ago, and but not just Brad. We had like the number 2 at IEX on a few years ago.
All those guys are great. I love the IEX guys. I clearly say I love you, IEX.
We're leaking here, Dennis. We got some selling balances. You nailed that yesterday when there were selling balances across the board, and I flipped my head, and we were down 7-8 handles. We're down here, bearing down on the pre-market low 0450.
Yeah.
I don't know if it was the jobless numbers that they came out.
Yeah, I mean they were. It was higher than expected. 861,000 people filed for unemployment last week versus a 765,000 estimate that was so high the prior week. So it's not going away. We're still in a freaking economic crisis here.
I know Mark's looking for like 4,100 or 4,200 and stuff, but man, these big boys got to turn it around. I'm looking at the Apple down to $1.86. That's down 16 points since its earnings. Microsoft made a new all-time high the other day, but it was no higher than it was after its earnings report. Amazon punished off that good report. I'm looking at, there's just right across the board here. I don't know. I still think we need the big boys. I think we need the big boys to get us back up here. I think this froth is going to come off, and until we get this rotation back into the big stocks, I'm a little bit, I don't want to say worried, but
I've been worried about it.
Right.
I've talked about being worried about the rotation out of the mega caps because you know what? The mega caps really started to puke. This market would really get hammered because it's still loaded.
No matter what. Yep.
It's still loaded with them. So you do have to be somewhat careful, just randomly coming in here and buying the dip on Amazon and buying the dip on a lot of these stocks because right now I don't know when that and you look at the scenario and you just think, okay, well, what if the pin pops and the small caps they start selling off everything? So I don't know how this plays out. It's a very interesting dynamic.
Do we get something else going on? Because someone's just leaning on this thing. Do we get something else? Any news here?
There was a bunch of 830 figures here, but nothing.
They don't like them. I mean, they're just locking this thing. They're just locking this thing down here. Yesterday's low is coming into play here at 96.50. Friday's low at 90.50. Someone is just saying, "Get me out here!" And so, I just saw like a 2-3 point print there. So
wait a minute. But also look at GME spiking. They were the GME indicator. GameStop is back. All right, let me bring on our guest here. Buck Andrews, the co-founder of Inform. Chat, you want to talk to Buck because unlike Joel and Dennis and myself, for that matter, Buck has been getting down and dirty in these crypto stocks. These tickers like SOS and Mara and Riot. Buck, that's right? You've been getting down and dirty here?
Yeah, well, when we talked about it last week, I said they're trading stocks, right? I said you put them on, you take your profits, wait for them to come back, consolidate, put them back on. And actually, from the time that we spoke about them, some of those stocks had 200% and 300% moves over the week, and they topped out yesterday. Obviously, that was a good time to take some profits, but they've had big moves. Look at we talked about Mara and Riot on our first show. Look where Riot has gone from where we talked about it at $17. Yeah. Up to 83 yesterday from 17. So yeah, and interestingly, while the S&P is selling off here, these things are not. They were off earlier. They're off on the day, but they're not selling off with the S&P. They're not following the market at all.
Well, they follow Bitcoin. We know that. So
yeah, they're following Bitcoin. Yeah.
So Buck, you have been actively trading these. You mentioned the fact that yesterday would have been a good day to take some off the table. How are you approaching this now? Are you still long? Are you buying dips? What are you doing?
Yeah, so what I'm doing, a couple of strategies here. When these things that, for instance, the miners are, it's a capital intensive business, so they've been having a lot of offerings, right? So when I see the offerings come up, what I try to do is I try to buy right above the offering price. And SOS, for instance, came off, and you had an opportunity to buy that above the offering price, and it was up 40% the next day. And that was about $7, and then it ran up to 15. So it doubled from the time it did the offering a few days ago. The same thing with when you looked at Mara that had an offering. So I watch the offerings as an opportunity to get in, and then I have a few of them. I have about 4 or 5 of them that I have positions in, but I spread it out, so I'm not like heavily concentrated in any one. And then when they do tend to move together though. So when they move, I'll take some profits and wait for them to come back, and then consolidate and put them back on again.
I just want to point out here. I'm going to zoom in, make it easier for you all to see.
But these are trading. I mean, they're traders. Yeah.
So Buck's platform, Buck has been tracking all of these quote unquote Bitcoin stocks, and some of these are newer names than others, right? Like you all know, PayPal and Square and MSTR and Nvidia and GBTC, of course. But SOS is a newer name for crypto. CAN is a newer name. WBAI had a press release like 2 days ago, right? So Buck's been tracking this on his platform, so you can see it right there and kind of keep your. And I assume you're adding to this list as newer companies attach themselves and start moving with Bitcoin. So these are trading vehicles. You said that now. What does that mean? Does that mean you're buying this thing with like a 1 or 2 day or even an intraday time horizon, or what?
No, it doesn't at all, because I keep a half position.
Okay.
The question's going to be whether these continue to go up with the price of Bitcoin, and whether they're long-term investments. I mean, you have. You believe that cryptocurrency is here. It's the beginning of the cryptocurrency, like the beginning of the internet, which is what Mark Chaikin said the other day. And, do we have 10 years on these things? So that's yet to be seen. But if they are long-term positions and continue going up with Bitcoin, then, I think you saw ARK yesterday and the day before, they came out with a note saying ARK Investments, saying that they think that potentially Bitcoin could go to 350,000 or 500,000.
500,000? Is that what they said? Jeez. All right.
Yeah, they said that they said that potentially that it could go to 350. It's a finite instrument, a commodity. So it. And then I saw another report saying that they think by 2034 it could go to 1 million. So
you can't question.
It's going to be in 13 years from now, right? Now, if that happens, the question is, where do these stocks go in the next 15 years?
Yeah, you can't question Cathie Wood, I guess, right now. What else are you watching besides these Bitcoin stocks? And we had Twilio last night. We didn't get to that yet.
Yeah, Twilio. If you go to our growth watch list there, you can also see that Twilio is at the top of the growth watch list. So we also put out a growth watch list to follow stocks we like that are growth stocks, and Twilio's.
So these are stocks that you personally like.
These are stocks that I personally like.
Okay.
That are on the growth lists, my growth list. So these are
stocks that you would like buy on dips, for example.
Yes, I would.
Okay.
Yeah. That have they have very solid businesses that should continue to grow for the next 3 to 5 years.
Stocks valuation doesn't concern you on any of this stuff, or you just don't care. This market doesn't care about valuation, so you don't care either.
What's that
kind of? I mean, I've kind of gone that way myself, Buck. I've kind of gone that way myself with all of my newer trades, and the market doesn't care about valuation, so I don't look at it either. I mean, is that what this market?
No. Of course, if we get a correction here, these stocks are going to suffer. There's no doubt about it. But if you had them for 5 years or 3 years, you will probably do well on them. So eventually,
regardless,
even valuation, a rapidly growing stock will grow into its valuation.
Some will, yes. Some.
Yeah.
If you pick the right ones.
These are ones that I think will, right?
Yeah.
So stock like Twilio, for example, would you like chase that up this morning because it's up?
$40,
$60. No. Okay.
I would not chase it up. I'd wait a few days and see if it comes down to bases. And then it's getting harder and harder to find stocks that are making new highs, right? That are just consistently. I mean, picking stocks right now is getting a little bit difficult.
It's everything's gone. Everything's run.
They're up one day and then the next day they're down.
I mean, it's become you have to chase after a certain point. I know Dennis hates chasing, but at a certain
It's been
point,
paying to chase. You're right.
Yeah.
This is the environment that actually chasing has worked.
Yeah.
So.
Yeah.
Just
Momentum.
Yeah, and then Buck, you're still long your Cathie Wood ETFs, all of them.
Yeah, I am long them. Definitely long those.
Is there any one you like better than other ones, Buck? Like, cause there's like 5 or 6 of them, the Cathie Wood ETFs. Which one do you like the best?
Well, I like the ARKW. That's her primary. Big one.
That's the one that I own.
That's the
ARKW.
main one.
Yeah.
No, the main one. The main one is ARKK, I think. But
ARKK is a blend between the ARKG, so it's got some genomics in it, and the ARKW, so it's kind of a blend. But I use that ARKK for hedging my position. Like, the ARKW and the ARKG and the ARKQ. So when I want to hedge, I'll go short the ARKK.
You short stocks? That's not allowed after
Yeah.
tomorrow.
or if we've come back a bit and I want to add, put on some margin, I will go into the ARKK and I'll trade around that one and keep the other ones so that I don't.
I have an ARK pitch, ARKR. Do you know that one?
No, ARK Restaurants.
It's ARK Restaurants.
Is that really Cathie Ark or that's something else?
No, it's a restaurant company.
Oh, is that Cathie Wood's restaurant company?
No.
You get me all screwed up. I was like, whoa, this is under the radar. Don't say that. They're going to start buying it. It was a joke.
What kind of food do they serve?
I can see Dennis's finger going like right for the keyboard on that, just to lift the offers, Spencer. You got to be careful.
ARK Restaurants.
Did you guys see Cathie's interview yesterday?
No.
Right, she did an interview, and what's interesting about her is she trades these. She was talking about her strategy for corrections, and says when everybody, she's kind of like Buffett. She says when everybody else is selling, that's when she wants to be buying. And so what she does is she says as a bull market and a move continues, they will like put more and more stock out. They'll own more and more stock. So she said like her primary fund might own 55 positions at the top of the market. And she says what happens is when the market goes down, they sell out a lot of those losers and they take losses in them for tax purposes. And then they concentrate into the stocks they want. So they'll go from like 55 positions into like 30 positions, taking losses with the stocks they put on at the end of the move, and then concentrating heavily in stocks that they really like. And so she actually has a long strategy that plays these upturns and downturns pretty well.
Let's see, she was buying Signify Health yesterday, SGFY. She was buying Exact Sciences. She was buying CMLF. She was buying AbbVie. Those are her biggest buys yesterday.
She bought some Tesla yesterday too. She hadn't bought Tesla for a while.
Like 90,000 shares. Very small.
But she hadn't bought Tesla for a while, so that's interesting. It's come off.
She says
nibble back into Tesla.
Do you know why she said she's buying Tesla?
No, why?
She says she's buying Tesla because she doesn't think that people have the ride service business that they can potentially get into, that they're going to get into.
Yeah.
She doesn't.
Yeah, that's been talked about. Yeah,
been priced into the stock yet.
Okay.
This is. I looked at this one last night. I mean, this is if you're trading range inclined. This is it. This is what you're looking at, 780, and actually, it's traded down $18 today here. So, let's see. If it's going to hold, it's going to hold in this area. If not, man, you got some work to do on the downside. I don't know where, but we'll see what happens. 780. We'll keep an eye on that for sure. Buck, anything about the metals here? Silver and gold no longer being correlated. Any thoughts on the metals?
No, you're not. I'm all in the currency cryptos these days. And not in the metals.
That's why. Yeah, I agree.
I will say this: you have seen a continuation of the bonds to the downside. Pretty good continuation. They broke through the lows last week once we talked, and have continue moving down. So that's starting to get a little bit concerning.
All right, Buck Andrews is the co-founder of Inform. There is the link up on the screen for you to check it out, inform.info. Buck, thanks a lot for the time.
Thanks, Buck.
Yeah, thanks, guys.
All right, I have a confession to make, guys. Yesterday, one Luke Jacoby approached my desk at like 4:30 or 5 o'clock in the afternoon. He said, "Spencer, wouldn't it be funny if we bought GameStop right now?" And I said, "It would be funny. You're right." So we did buy GameStop. So we are long. I never owned GameStop in my life, but I went in my Webull account, which only has like hundreds of dollars in it, right?
Nothing.
Hundreds of dollars. Sorry, Dennis. I'm the reason that Dennis eats actually in the after-hour session because he was probably picking me off. Yeah, I went in my Webull account and bought some as many shares as I could afford in my freaking Webull account. So I'm long heading into the hearing.
That's a good call, actually.
Thank you, Luke. Dennis says it was a good call.
I thought about it.
You can't hear me.
I wish you would have told me that yesterday. I actually thought about it last night. I was like, they jacked this on the hearing. I thought this last night just to myself. I didn't say it to anybody, but just thought it.
Wait, Luke says that he did mention to me that we should ask Dennis if this is a good idea, and I said we shouldn't.
Luke, you should have said. I would have said yes, and I would have did it with you.
We shouldn't do that. We shouldn't do that. Is what
I would have did it with you.
Oh. Sorry.
I think it could. They could jack it on. I don't have a position on it. They could. Yeah. It's possible. There's, we don't know, but sometimes, it's going to get a lot talked about. Does it get, the market's excited again about it? Not that it's going to go back to 70 or 80, but does it get jacked up to 50 or 55? It's possible.
Perhaps.
So, there's often a trade, and the trade ahead of it is sometimes the call too. So, you're already up $1.30 in it, so it's a nice trade. So.
All right. I wanted to do some questions from our chat. We had mentioned this on Tuesday, but the Palantir lockup expiration is today, so insiders can sell the remaining shares that they were not allowed to sell on the direct listing IPO last year. So insiders are now free to sell whatever they want to sell.
We told you this thing was going to 25.
Yeah,
everyone got all excited because Kathy bought some. I mean,
I bought and sold it on the Kathy, so there was money to be made there.
Yeah,
you buy it and you sell it to the Kathy pop.
Yeah. Weird things happen on these kind of days, right? Sometimes you just get that blast low, and then no one's really selling, and then it turns around. So you're coming into this area, and today's actual lockup day. So I think didn't DraftKings everyone was pounding it into the lockup expiration, and
sometimes
it turned around.
Turn before.
Yeah. Yeah,
there's just so much overhead supply and so many bag holders here now. It makes me. Somebody's asking, is this like Rocket? It's building so much overhead supply, and if you look at this chart, just from the last month and a half, it actually looks just like the Rocket chart to a certain extent. You're sitting here on major support on Rocket, 19 to 20. You're coming into major support on Palantir around this $25 area. Does it hang out here? Does it bounce here? Yeah, it could, but it's just like the bounces are going to be trouble. I mean, even when Kathy bought 1.5 million shares, they immediately, that morning it got the little lift and then they sold it. So, Goldman even upgraded it yesterday and they sold into that too. There's so many people who are stuck in this now and so many people who are on the wrong side of the trade. It makes it tougher for it to bounce back. So actually, path of least resistance for this thing is probably still lower. So I'm not long Palantir. I actually bought it last night ahead of the ARC. I bought it last night because the email's going to come up like 6:30, 6:40. I was like, well, she might have bought it again and maybe it gets a pop. And the email came out like 6:35 and I was like, oh, it's not in there. I sold it immediately like 26.90 or something. I should have went short. I wasn't thinking. I should have turned around and went short last night at 26.90 when she didn't.
How often do you do that? Like reverse?
Not enough.
Yeah,
you think, oh, I'm on the wrong side. I'm on the wrong side of this, and you immediately hit the bid because you're on the wrong side of it. And if you're really on the wrong side of it, we'll turn around and hit the bid twice. It goes short.
Well, you can't though, right? With it depends on the
tech and the 10%.
Yeah.
Sometimes, if it's 10%, if it's traded, you can't hit the bid to get short. You got to get lifted, but you get lifted on Palantir. I mean, the thing's crazy.
I bet.
Oh, it's traded 33 million shares already this morning, Joel. This thing is crazy trading.
Wow.
But if you're buying it at 25 and just think, oh, it's going to be back at 35 next week, I think you're wrong. I think it's got work to do. I would wait until it stops going down consolidate, like you say, Joel, base, learning this from you, and start to actually go up. Get the momentum on your side, because right now the momentum is completely against you. Could it bounce off the 25 level? Yeah, it's a big level. It could, but you got a lot of, you got that, obviously the lockup. What's Kathy do tonight? Does she come back in and buy more? That could help it a bit, but again, that buy got faded too. And I mean, Kathy's having a rough day, because I'm looking at all of her trades from last night. And usually they're up. And, overall market's obviously getting hit too. But, I mean, she bought more Tesla, and that's getting slammed way more in the market. She bought more Shopify. Shopify's getting hammered. It's down another 40. Obviously it's a risk-off day. But she's not, popping the stocks like she has been, So, anyways.
I just say, it's her programs, I mean, like, she can't be sitting there making, okay, look at this chart. Oh, look at this. She has the algo. I mean, the program that's run. I don't
know. I don't know. I don't know if they're doing people. You got a whole. I don't know if they're doing. Are they running algorithms to get in and out of their positions? Well, a lot of the big hedge funds are. They should probably
have to. I mean,
she's basically a hedge fund, right?
Yeah, but look, you think you have to on 17 trades? How many trades does she make? I mean, yeah, there's individual trades. She's building positions in these. So there's a lot of trades within these. But I mean, 32 different stocks trading yesterday. I mean, you could totally do that, man.
I mean, you can't argue the performance of her funds.
If you had a team of traders, a few traders, you totally could. I'm sure she's using algorithms, but I'm just saying, when you look at Citadel, and they would have traded almost every single stock on the exchanges yesterday. Like, this is not a trading company. ARK is not a trading company. This is light trading. I mean, 32 stocks. I trade more than 32 stocks in a day. So, and I do a lot of it manually. So, you totally could, get away with not having algorithms there. I'm just assuming she does, because everybody does. She don't need them. Not at that volume.
Just back. We're coming into this area. You come into this area here. I mean, you had this many lows. I know Kenny talked about just under 24. I mean, this is a real interesting area. If you're looking to buy it back on strength, I'm pretty close here on this 50% retracement. That's back up at like 28.50 area. So if you wanted it to prove itself and get above that, that retracement, then that's what you're looking at in PLTR. 2 minutes to go, Spencer. S&P's got down to 98.75. That's not quite yesterday's low at 96.50. Trying to bounce. Not doing a great job of it, though.
Let's cover BIDU real fast. They had earnings yesterday afternoon. Stock is down this morning. Excuse me. It's been up a lot. It's been running hard into this report.
Yeah.
EPS beat. Sales missed. And they gave some Q1 sales guidance.
Sales miss. The stock's up 150 points in a month and a half, and the sales miss?
I mean, it was barely missed. It was basically in line. All right, I'll call it in line. And then they gave some Q1 sales guidance that was higher than the estimate.
This stock is loved. This turned around and started getting loved when they started talking about EV. I know. Did we get any more information on their plans here? I mean, that was what it was, right? The EV rally in BIDU, was it not?
Yeah, they said
like $100.
They said something about that last week.
That's what really kickstarted this thing. So I mean, you need more information on what's going on.
They're going to provide chips, right? That's what it was.
Yeah.
They're going to provide chips for these EVs.
Yeah, I don't know. It's still a loved stock. It'll find some love somewhere, but it's a risk-off day, so I let the dust settle on a few of these stocks.
Wow, that thing was $100 for the longest time. Look at that.
Forever. It was hated, and then they started talking about EV chips, and then that blast off. That was the story. If Walmart turned around and started talking about EV chips, they'd probably blast the stock off. So they want a story.
What is Walmart?
The story.
Let's check out Walmart. Let's see what it's doing.
Still leaking.
Is it doing anything? Still leaking?
Yeah, still leaking. They need to they need to start accepting Bitcoin at Walmart.
It's going to drag the whole Dow down this morning. It already is.
That's a good point. Yeah, a little bit.
Yeah, why doesn't Walmart just come out and say we accept Bitcoin? Oh my God, that's a great idea.
I tell you, I should be in there. We get that stock back up. Yeah. We're taking on Bitcoin. We bought Bitcoin and we're accepting as well. Yeah, and we took a big position in all of our cash. All the money we made last quarter, we bought Bitcoin with it. Be like, Walmart, the Bitcoin trade. Bye. That was what they do. Stupid.
We're raking it in.
We're raking it in, man.
That's
What movie's that from?
No, you know what movie. That's
No,
not a movie.
that's
That's
not-
NAT.
That's from the guy on CNBC. That's
Dennis'
Dennis's favorite interview of all time.
Yeah. Full disclosure, I'm actually long some of that stock. I have to say that.
Oh, all right. Jeez.
Just for fun.
No, that was like
Nothing's for fun. But.
That was like a year ago, right?
Yeah, that CEO from Nordic Americans on Kramer. And he was like bragging so much about his company because that was when oil went negative. And he's got the tankers. Me and Chase Razik wanted to drain our swimming pools, put oil in there, take advantage of the negative oil prices. He got the tankers. He's like that. We're raking it in, man.
Yeah,
that was the top.
Yeah, that was the top.
You can see
when your CEO comes on Kramer and says we're raking it in, it's time to sell.
Perhaps. All right. That'll be a wrap for us today. I want to remind you that today's show is sponsored by Inform. To learn more, go to inform.info. That's IN4M.info. Thanks to our guests today, both of them, Buck and Mark. Thanks to all of you in our chat. Hit that like button if you have not already. Hit that like button. Hit subscribe to get notified when we go live. Hit share.
I just liked you.
Thank you very much, Dennis. We appreciate your service as usual. I want to promote our upcoming boot camp this Saturday. Options and SPACs, a full day of education on that. You can go to benzingabootcamp.com to learn more. This podcast, or this show, is available as a podcast, excuse me. If you are watching or listening via podcast, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a good rest of your day.